If you really want to understand a company, the stock price and the news headlines, they only tell you part of the story. For the real story, the unvarnished truth, you've got to go straight to the source, and that's exactly what we're going to do today. We're going to deconstruct Okta's latest quarterly report.
So how do you get under the hood? I mean, really figure out how a company is doing. Press releases are all polished and shiny, right? And CEO interviews, they're rehearsed. But there is one document that just cuts through all that noise. And that document is called the Form 10-Q. Honestly, the best way to think about it is like a company's official report card. They have to file it with regulators every 3 months. And here's the key part. It's not marketing. It is a legal document. It tells the story of their financial health, their strategy, and, my favorite part, what they're most worried about. So yeah, let's dig in.
All right, so for our little tour of Okta's 10Q, we're going to start right where most people do, the basics, the numbers that always get the headlines, the top and bottom lines.
Okay, the bottom line, profit. What did they actually earn? Every report card has that final grade, right? In business, that's profit. It's pretty simple, really. It starts with all the money that came in the door, and then after you subtract all the costs, what's actually left over?
So for Okta, in the 3 months ending on October 31st, 2025, their total revenue was a massive $742 million. That's the big number at the top.
And then, after paying for absolutely everything, we're talking servers, salaries, the whole shebang, what was left? Well, that's the net income, the profit. And it came out to $43 million. Now, a number like that, it's pretty meaningless on its own, right? Is 43 million good, bad? Let's find out. And this is where it gets really interesting. You have to compare to the same quarter last year. So, revenue? Yeah, that saw some healthy growth, up from $665 million. But check out the net income. It went from $16 million all the way up to $43 million. That means their profit almost tripled. So, the big question is, how does a company this big pull that off in just 1 year? To get that answer, we've got to follow the cash. Where did the money really come from and go? See, because profit on a spreadsheet and actual hard cash in the bank, those are two very, very different things. A company's true health, you can often find it by looking at how they manage their cash. And that brings us to something called the Statement of Cash Flows. This is the part of the report that shows if the business is actually generating more money than it spends. It basically ignores all the fancy accounting estimates and just tracks the cold, hard cash moving in and out of the company. It's broken down into 3 main activities. So here's Okta's 9-month cash story broken down. First up, from their day-to-day operations, their core business, they generated a whopping $626 million in cash. That is a fantastic sign. Then, from their investing activities, they gained another $223 million. But then, look at this third number. For financing, they actually spent $622 million. And what was that on? Mostly paying down debt. So what this tells us is that their main business is super healthy, and they're smartly using that cash to make their balance sheet even stronger. Okay, so we've looked at the past, but what's really cool about the 10Q is that it also gives us a peek into the future. How much business is already locked in? This is especially interesting for a subscription company like Okta. And the magic metric for that is something called Remaining Performance Obligations, or RPO for short. It's a powerful metric that's basically a company's book of future business that's already under contract. The easiest way to think of it is like a backlog. It's the total value of all the contracts they've already signed but haven't actually billed for yet. In other words, it's future revenue that's already guaranteed. And for Okta, this number is just staggering. We're talking $4.29 billion with a B. That is an enormous pipeline of predictable revenue that they know is coming down the pike. It's already in the bag. So when is all that money going to hit the books? Well, this chart breaks it down. Over half of that huge number, that's $2.3 billion, is expected to turn into actual revenue in just the next 12 months. This gives the business this incredible stability, this clear line of sight into its future growth. And that is exactly what investors want to see.
All right, so the numbers look pretty great, right? And the future looks nice and predictable. But now we get to the really juicy part of the 10Q. We're going to read between the lines, because companies are legally required to tell you what keeps them up at night. What are the biggest risks they're facing?
And Okta, to their credit, is incredibly direct about it. I mean, just listen to this quote pulled right from their risk factors section. They are telling you straight up that past cybersecurity incidents have harmed their reputation and their bottom line. For a company whose entire business is built on trust and security, wow, that is a huge admission. And it doesn't stop there. They go on to name their biggest competitor, and it's a big one, Microsoft, a tech giant with, let's be real, almost unlimited resources. They also point to things like the uncertain global economy and the fact that as they go after bigger and bigger customers, those deals take longer to close, making things less predictable. These are the real headwinds they're flying into, the things that could totally challenge that amazing growth we were just talking about. So there you have it. The Form 10Q gives us the whole story, warts and all. On one hand, you've got this company with fantastic growth, profits that are just soaring, and billions in guaranteed future business. But on the other hand, they're staring down a behemoth competitor and have this critical, constant challenge of cybersecurity hanging over their head. And that leaves us with the big, final question. Okta is growing and profitable, no doubt. But can it navigate these major risks that it's laying out for everyone to see?